Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been sponsored by Orbex. I will look at euro dollar, Aussie dollar, gold, crude oil and dollar NOK, and also the S&P 500. As you know, US dollar is moving quite sharply to the upside for the last few weeks after tapering announcement from the Fed, and actually yesterday Biden also announced that he will renominate Powell, meaning that they will stick probably with the current policy decisions and they will continue with the tapering. Maybe at some point even look then at higher interest rates. While on the opposite side you have the ECB, which is very dovish and they do not see higher rates next year. So this is what is driving the euro dollar to the downside. Also you have these lockdowns going on in Europe that could spread in even more countries very soon. So this is something that we have to consider when we are tracking euro. So overall, I think that euro dollar could face much more weakness. But before we go to some intraday charts, let me review this weekly time frame. Now, or even better, on the monthly chart, we are still seeing ongoing downtrend. We've been tracking this wave B rally for a while. We were observing two scenarios: ABC to here above 2017 highs, or maybe if we will stay sideways, it can be even a triangle. And this triangle appears to be the case here with still ongoing formation. So it's incomplete pattern. When looking at the weekly, it's an A, B, C, and now ideally you are here in a wave D. So even if you would be very bullish at some point, we should see this wave E rally. In normal scenarios, you will see this happening from the lower trendline support, but obviously this can happen much higher as well. So these are some levels that I'm focusing on here at 1.1880. It's also the 61.8%. So definitely very important level, especially if we consider these swing highs from and swing lows from last year. So for now, there is still room obviously for more weakness. If we look on 4-hour time frame charts here, we have ongoing 5 waves of decline. Okay, you have very nice 5 subwaves with an extended wave 3, so watch out for a wave 4 pullback and then even more weakness. Also you have this base channel that was broken firstly here, then reacted as a resistance in this wave 4, and obviously I'm looking for something very similar to happen here in upcoming 4th wave. Okay, so 1.1375 is ideal resistance for a next sell-off. You also have some divergence here on the RSI, so actually I would not be surprised to see this bears actually to slow down. Now let's take a look also on Aussie dollar. Now Aussie dollar is turning to the downside. More importantly, before we go to the higher time frames, let me just show you this daily chart. Notice that we had a very clear 3-wave rally here that stopped at the upper parallel trend line, while we are now facing a reversal that is breaking the lower trend line support. So this is technical reaction that confirms where the trend is. Okay, the trend is clearly still to the downside. After all, you have here lower highs and lower swing lows, meaning that yes, this is probably still downtrend in progress. And when you have this broken trend line after only 3-wave rise, that's even more significant. So I'm looking now for a 5th wave drop that will take us here below these wave 3 levels, and then maybe we get some kind of a rally as we approach end of the year. Now 0.7 psychological level is definitely going to be a very important zone to observe. Now looking at this higher degree time frame charts and the weekly scale, still we are in a wave B, a very big counter trend movement. So this correction could now last a little bit longer than I anticipated. Now looking at the 4-hour chart, here clearly we have this downtrend in progress. I will expect more weakness, but just be aware of some kind of a recovery here in the near term. After all, we came quite nicely to the downside, so there can be some slowdown coming. The first resistance that we should pay attention on is at 72.90 area, and then you have 73.70, where obviously if breached, I would have to adjust the wave count, but still would be looking then for wave 2 rally before we turn back to the downside once again. Now let's take a look also on gold. Now metals came to the downside now on speculations, most likely on speculations that with Powell, Fed will fight inflation, and that's why could be the reason for some weakness here overall. We have also seen stock market turning to the downside. There's also some risk on crude oil, and dollar obviously seems to be very attractive at this stage. But when looking at this daily time frame, still ongoing consolidation. Okay, despite this very strong sell-off, we have seen plenty of sell-offs in the past. Didn't mean anything significant here. It's just in the middle of a range. So again, just keep in mind that higher degree time frames in these uncertain times are probably the best to observe. Notice that we have a very nice ongoing uptrend, and we are now currently just tracking ongoing consolidation. Now consolidations, I know that sometimes can be very tricky because if they are complex, different scenarios are valid. So for now, I'm still observing an ABCDE triangle and currently falling prices into the first leg of a wave E. Keep in mind that each leg in a triangle should be made by 3 waves. So this is wave A, and I will be expecting more weakness here. So here you can see this wave A that I'm talking about. So more weakness could be seen for a wave E. Maybe for some short-term traders, this wave B rally could be even interesting. Of course, if this first drop will really unfold in 5 waves. For now, it's still not the case, but looks very promising. So I'm thinking about more weakness after this wave B rally. Now, on this more aggressive bearish view, this could also be a triangle in a wave B rather than in a wave 4, but even this one suggests more weakness, but with much more downside potential after rally. Okay, so for now, I think that metals could stay under pressure, but once we will see this 3-wave drop, that's when we again should be very careful, especially when we may approach these 2 trend lines. Now let's take a look also, we said, on crude oil. So what is going on crude oil? Well, the US has announced that they could release crude oil reserves. OPEC, however, could change its plans if this will really be the case. So we will see how this will impact the oil prices. Overall, what we have to consider is more crude oil is out there. It means that lower can be the price, especially if maybe demand will not be so high if we consider that there can be new lockdowns here spreading in Europe. So this could be a very tough situation for a bulls on crude oil. After all, I'm still observing this 5th wave rise, meaning that you are in the final stage of this advance from past year lows. So there will be limited upside. Of course, there is a chance for another rally here and then a reversal, but overall I think that this is a very tricky situation. I think that at some point we will face much deeper correction. If this will happen from current levels or from a new high, really I don't care. I just think that we should be aware of a slowdown and more choppy price action or even lower price action in the next few months. Okay, now when it comes to trading, if you still want to be on the long side of crude oil, then observe the 4-hour time frames here. Now this is still obviously quite overlapping and not really impulsive decline. It still can become impulsive decline if we'll suddenly see a very strong drop. So we'll see how this will unfold, but for bulls you really want to see a daily close back above $80 per barrel to make sure that this was after all only a corrective decline and that we are headed higher, but only with 3 waves back to new high to complete this ending diagonal. So still a pattern that suggests a top sooner or later. Now with that being said, if crude oil somehow will face limited upside, let's also assume that maybe crude oil will after all break to the downside back towards $70 in the next few days, then I think that dollar could have even more attention, especially versus commodity currencies. I mean, dollar NOK is definitely looking very interesting. Here we have ongoing correction away from these 2021 lows. It should be made in 3 waves. I've been tracking this wave B, and after this recent break above this trendline resistance, I think that there is room for much more upside here. Now wave C should, based on minimum expectations, definitely take this wave A out and should be made by 5 subwaves. So if we look at the 4-hour time frame charts, well, that's not the case. Okay, so that's still ongoing 5-wave recovery in my opinion. If crude oil will after all find a support rather than break to the downside, then this could trigger maybe some very healthy corrective, intraday corrective setback here on dollar NOK. So in such case, watch out for support here at this previous broken resistance becomes a support at 8.80 level. Also, this lower trend line can be very important as well. So dollar NOK is definitely very interesting while the US dollar is moving to the upside. Also, at the same time, I would be watching euro dollar for potential more weakness, but after a rally as well. Now let's take a look on the final market, which will be the S&P 500. Now the S&P 500 is here in a very strong uptrend. I see it in a 5th wave. We've been tracking this 5th wave for a while now. It could be actually a wave 5 of even higher degree of extended wave 3, but this really doesn't make any difference regarding the near-term outlook. I'm still thinking that sooner or later we will face limited upside and that market will turn into a higher degree correction. However, this may not be the case yet, because when looking at the substructure of this 5th wave, well, you don't have these 5 waves up yet. This is wave 1, you had a wave 2, nice extended wave 3. Looks like that we are now slowing down for this wave 4. So nice supports. The first one would definitely be at the former wave 4 at 46.28, and then you have 4600, and slightly lower you have this previous all-time highs. So overall, I think that this again could be just a temporary setback with room for more upside, but after we see 3-wave setback. For now, that's still only first leg of a corrective 4th wave, unless we stay just sideways here, okay, and we'll see just moves to the sideways rather than to the downside. Then this could also be a triangle in a wave 4, but still part of ongoing uptrend. So I will continue to wait on these pullbacks to be just temporary and then a new bounce higher, as long the market is trading, or I will say as long the market is not making a daily close below this 45.50 level. A daily close below that figure would likely suggest that we are headed much lower, especially if at the same point we would say we would have these 5 waves down into this area. Okay, so traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.